Hello, I'm Alex Mozed, and welcome to Winner Take All, where we talk about the constant battles between large tech monopolies and traditional incumbents. I'm excited to be joined by Kara Marciscano today from WisdomTree. She's a senior research analyst at WisdomTree, and great to have you today on the show, Kara. Thanks for joining us.
Hi.
What I'm showing here on my screen is PLAT. PLAT's the WisdomTree Modern Tech Platform Growth Fund. It's up about 13%. 13% year to date in 2020, which is pretty remarkable, all things considered. But what I mean, you're at WisdomTree. You follow a lot of funds in your role there. When you look at PLAT versus some of the other maybe more traditional indices or some of the classic tech indices, what do you see as the contrast or the differences between PLAT and some of these other indices out there?
Quick background on PLAT. We launched it a little bit over a year ago. Didn't really see investment exposure to this specific type of business model. So, we took the opportunity to put a fund out there that really doesn't have any competitors as far as having that same investment objective. And performance has been really strong. So year to date, like you were saying, as of yesterday's close, PLAT is up 13.6%. And that stacks up really, really well against benchmarks and comps. But, what would we consider benchmarks and comps for PLAT? For one, PLAT doesn't necessarily fit into one bucket of comps because it has really diverse exposure. So intuitively, people would associate this modern tech platform fund, the ticker's PLAT, with being an infotech sort of sector exposure. But it's actually 75% of its weight is spread evenly across communication services, consumer discretionary, and information technology. So it's pretty diverse. It's split 60-40, so 60% U.S. domicile, 40% non-U.S. domicile companies. So when we think about comps and benchmarks for PLAT, it sort of makes sense to compare it across three planes. The first being across broad U.S. and global equities. The second being, just overall growth strategies, and then also, of course, tech strategies. So looking at that first plane compared to overall U.S. and global equities year to date, PLAT has been, pretty stellar performance versus S&P 500, Dow Jones, MSCI ACWI, the All Country World Index. And if we move down to the second plane to growth benchmarks like S&P 500 growth, so 1000 growth, NASDAQ 100 index, still really strong performance. So PLAT has at least 6 percentage points over the Russell and S&P growth indexes. And then it's held a little bit tighter performance with the NASDAQ 100 index. But actually over the last couple of days, PLAT has started to break away from the NASDAQ 100, and it has about 2 percentage points of outperformance over the NASDAQ 100. And then finally against, infotech indexes like S&P 500 Infotech, MSCI ACWI Infotech, there are two, tech ETFs, FTech and RYT, that capture market cap weighted tech versus equal cap weighted tech. Speaking broadly, PLAT has between 4 and 12 percentage points of outperformance versus tech strategies out there.
It makes sense, I'd say, at a high level, why tech and growth just overall have been able to outperform some of the traditional indices, right? Like you were talking about, like the S&P 500, the Dow Jones, particularly when we look at year to date, which is primarily looking at the impact of COVID-19 and what's going on with these macro issues. But I think what you were also getting at there is, okay, but between the growth specific indices, how is it faring? And that was the interesting point to me. Something that I track quite regularly is the QQQ, the NASDAQ 100. And as you were saying, it's, maybe a couple percent ahead of how QQQ is pacing so far year to date in 2020. And maybe that's the differentiator to say amongst the growth indices, all the stocks in PLAT are absolutely considered growth companies. These are platform dominant, many of them monopoly, tech-driven companies. But there are all these platform businesses, and these platform businesses have winner-take-all dynamics. They have network effects. They have basically, a model where there's only one or two given winners in any industry. The barriers to entry are much higher. That means their margins are much more defensible and usually much higher, which means they usually have much higher multiples and can reinvest in growth and so on and so forth. And I think we're seeing that with a lot of, say, the ultra large cap platform stocks continuing to double down on growth, like a Facebook and others that are actually being rather acquisitive during this time. But when you look at these growth indices that you were mentioning and PLAT and these platform stocks, is the common knock that the platform stocks are overpriced, right? I think that's kind of the value investor knock is, hey, these stocks are overpriced, they're not worth it. What do the past few months, if anything, do to that argument? And does that argument continue to hold true, going into the future? Any perspective on that?
I think over the past few months, that has definitely knocked down that argument a little bit. So from the peak to trough, so when the S&P 500 peaked on February 19th to its trough on the 23rd, pretty much all of the comps that we mentioned earlier were down around 30%, but NASDAQ and PLAT were down the least. PLAT lagged NASDAQ, a little bit. And part of that was because of those mega cap platforms, actually, that you mentioned, that if you look at Microsoft and Amazon, holding those companies, those platform companies was, for sure a benefit. So you're right on that point. But then holding those platforms like Expedia and Bookings detracted from performance. And that makes sense because you're going into a shelter in place environment and, you're not taking part in travel and leisure. But then you can draw that argument out a little bit further and look at stocks like airlines, cruise lines, hotels. If you tap into that sort of travel and leisure in a traditional sense, buying those companies were down, anywhere between 50 and 80%. Where if you tapped into the platform version of travel and leisure, Expedia and Bookings don't look that bad. It's really what hurt odd market indexes, growth indexes, not necessarily not owning the platforms, but being very overweight non-platform companies. And then I also think what's been super interesting is while these indexes moved kind of down in lockstep since that trough on March 23rd, the range in outperformance for PLAT versus those benchmarks has been significantly larger. So it's no longer moving in lockstep, and PLAT has really broke out in April and particularly in May. And as we've sort of seen this reopening or signals of reopening in the economy, those same stocks like Expedia and Bookings are starting to come back, and we're seeing companies like Uber or real estate focused companies like Zillow become some of the top performers among the Amazon, Microsoft companies there.
If we look at Marriott, for example, they're down maybe 33, 35% from where they were pre-corona. Now we look at Booking. They're down maybe 15%, right? And I think that kind of gets to your point where we actually looked at Marriott and Booking a few weeks ago on the show. Marriott does have a somewhat asset-light business model where, they have these kind of franchisees, hotel owners, and they are the management company. It's kind of asset-lighty, but it doesn't have the platform strength that a Booking has. And so it was really interesting to compare and contrast the two going into this crisis. we're not out of the crisis, but we're certainly a few months into this crisis, and you've certainly seen the relative platform dominant strengths in that hospitality vertical, right? Like hotel and stays bouncing back much faster than the dominant kind of more traditional player in the space, which is very interesting. So I think to your point, you have diversification on an industry level, but what PLAT is able to do is basically pick the strongest businesses across all of these different verticals. I mean, you have hospitality exposure, but you're going to go down the least and you're going to bounce back the fastest when you have these crazy, unpredictable black swan macroeconomic cycles. And that's pretty powerful when you think about it from a diversification standpoint in that respect.
Sector exposures for PLAT has been super, super strong. So that means that it's not necessarily being overweight a certain sector that's driving performance, but actually picking the right stocks in those sectors has been a huge benefit for PLAT year to date.
Amazing. Well, Kara, it's great to have you on the show today. I hope you'll come back and educate us with some more platform knowledge. Really wonderful to have you on today. Thanks so much.
Thanks so much for having me.
Hi, this is Alex from Winner Take All. Thanks for joining us. Hope you enjoyed the content. Feel free to leave a comment, ask us questions, and definitely make sure to join us on our next live stream.